what is the difference between a millionaire and a billionaire?
The difference between a millionaire and billionaire is a very simple thing. Billionaire is open to share. Millionaire is not. If I have to ask you this question, the difference between the millionaire and billionaire, what would be your take?
Well, I think for a millionaire, his asset is the inventory. The inventory that he has, that is his asset. And for a billionaire, his people are his assets.
Oh wow, what about my thought?
That's what I think the difference is. I've been a curious person, as you know, and before I start my questions, I want to thank you for constant learnings that I've gotten from you always. I know you for a few years, and I want to admit that whenever I have chance to meet you or talk to you, I always learn new aspects of finance, new aspects of investing, as well as for life. So I want to thank you for that before I
Most
start.
welcome, but I think the man sitting here, the Buffett, I think we all should be thankful to him. I was also a very normal person, a banker, and was not even reading. But when I started the business, inspiring from people like you, and I just want to do something different because I never wanted to be sit in a shop and write the invoices. You can make money by doing that also, but more than the money, I think we all want to have a good life. So whatever learning you have through me, I'm very thank you for the kind words. That day also we met and you talked about the annual letter. All I have learned from Buffett, Howard Mark, and Munger. So I think we all are the right path. And now I also know something more about you to the IPO and all. So I think I'm very happy to for this long journey. So please ask and let's see whether if I can answer those questions.
Yeah. So my first question is, as a client and investor, what are one or two questions you wish more clients asked you before giving you to manage their money?
So, Pradeep, what happens? There are two types of clients, and I always call it a dekha-dekhi strategy. So, when a customer comes, he is referred by somebody. Very few people are like you who have their own mind. And I still remember you came to my home and I showed you the whole proof of concept, and then again and I think you have a typical style, and I think that's an amazing style. So the challenge here is people don't have enough questions. And that is how the outlook is. I think the one reason why you have that outlook, because you work with many people and you work in many countries and you have seen more problems. Yeah. Because I think what was happening in Dubai is just a iota of what happened in Africa, I believe. Yeah. And your hardship we discussed in the morning. So I literally have teared to heard that you can't attend your brother's marriage. But coming to this point, that I wish people have their independent thinking. So they can understand that when I can buy an Apple phone and I keep buying an Apple phone again, why can't I be Apple's part owner? So beyond the stock market movement of price ticker, if people can ask me about the businesses where we invest and why we invest, that is one thing I think we all are missing. Generally, when we onboard people, after telling them everything, they still, when the portfolio goes down, they come to us as if they have been not told about it. So I think it's very important people understand why these businesses are great. And the second thing, they should also understand and ask the question about inflation. Now, I understand there are a lot of countries which are not having any tax, but the biggest tax is inflation. Yeah. So while Asian economies are very conventional, so when we buy gold and real estate, we are all blind. We don't measure. Yeah. But when we come to stock market, we want 30-40% return. Yeah. So I think they also need to ask questions about inflation, and we all have to understand that we have to at least beat the inflation with or without me. So even if it is your own money, because we all are going to not take this money. Like this body, the soul is there, and soul is only what we will take with us. Similarly, this money will not go with us. Yeah. So we all have a responsibility to understand inflation. So I wish inflation, that's second. And they ask me about the businesses. And that's the two questions that they ask, I think they'll become like you.
Okay. The second question is, if you had to write owner's manual for the people investing with you, what will be the three questions or three non-negotiable terms that you think they should address to?
Yeah, so owner's manual is investment methodology. And Terry Smith, who manages the money in the UK, he has written a beautiful owner's manual. And we call it investment checklist and the forensic checklist. So the three very core of the owner's manual are the return on equity, which is the quality of a business. The second is the free cash flow, the growth engine, because all the money we make is for growth. And the third very important thing is fair valuation. Today you see that because of AI, a lot of IT companies have come from price to earning of 60 to 20, 15 in fact. So it's very important to pay fair price for a wonderful company. So in my owner's manual, these three are very central ingredients of the manual. And then there are a lot of side hustles to make sure that what you see in these three figures can also be sometime fudge. So that is the culture of the business, is what also one has to write well. So ethics, culture, and integrity, they all are somewhere shown in this, but they also need a mention in how you can measure them. These things will be written.
Okay, so you mean the way, for example, Warren Buffett says that I look to buy companies at good companies at cheap price. So that's the fundamentals that you follow.
So that was the old fundamental. So when Ben Graham was his hero, and he was so we have to understand, and to understand Buffett, we have to understand his lifespan. Now Buffett learned a lot from Ben Graham. Ben Graham is called father of value investing. This book here, The Intelligent Investor, is written by him. Now Ben Graham was investing in the World War II era. Something what happened in China a year or 2 years ago. So will you believe that a company at a book value of $100 was available at $70, which is not possible to have a negative intrinsic value or negative EV. So when Ben Graham was investing, he was investing like that. Like there is also one word called cigar butt. Now those who smoke, so if I want a free puff, I have to go to near a dustbin, and I'll find a lot of these cigarettes left with the last puff. And if I collect them, I can have a full cigarette for free. Now that is exactly what you said, throwaway price. But now if you look at a quality business like Apple or Google or Microsoft, you won't get them so cheap.
Yeah.
And that is how in the later part of his life, when Charlie Munger told him that what you have been doing as per the Ben Graham method is now dead. And then he became partly Philip Fisher. So buying wonderful company at fair price is what I meant here.
I see. Okay. So have the wonderful companies, but at fair value.
Yeah. It's like I come to you, your company is having no debt. 50 countries you have presence. Will you sell me cheap?
Of course not.
Yeah. So you will not sell me cheap, but you will sell me at fair price, because you also want me to make money if I become a shareholder. So you will leave something on the table. So if I see that the company is ethical, company has an amazing growth, and the quality of growth is also great, and I see the hunger in you or your partners or your business, then why should I get it for cheap? And you will also not offer it for cheap, but you will obviously not overcharge me. And that's the game.
So it has to be fair and win-win.
Absolutely. It has a win-win. So it's partnership then, it's partnership now, it's partnership in the future. So the only reason when people want to, let's say, sell you at a very, very high price, when you want to exit.
Yeah.
And then you just said, I'm bored, fed up of the business, or there is something hidden you're not telling me. So that is the only reason why people sell at a price where I will not make any money.
So Bhuvan, you often talk about not losing the money. How has that philosophy changed, or has it not been changed after really managing the real client's money instead of only your own portfolio?
Yeah, so I think it's one of the wonderful thing happened to all of us, and I believe even if I am not a public fund manager, even I'll commit a mistake. So Pradeep, when you do things in private, what are you scrolling on the browser? Who is seeing it? But when the whole world is seeing it, we behave. So when we are in private, we would like to do all sort of things which will lose us money. But when you're in the public, So I always give this example that I am like a financial wife to my investors.
Yeah.
So to a housewife and a husband give 1,000 dirham or dollar in let's say on the start of the month, 30th of the month, he would have lost money. He would have gambled outside. He would have had a lot of drink or party or something. But when he comes to his wife, and if wife tells him, not able to tell him that where that 100 dirham has gone out of the 1,000 dirham, oh my God, I'm sure you understand what I'm trying to say. So when people are looking at you, I think you behave, and slowly and gradually it become your behavior. So now if I give you 5% return, then also it's a problem. If I give you 30% return, that also it's a problem, because then there will be a time like this which has come. So the philosophy has changed, that I am not into asset management business anymore. We are into client liability management business. So it is very important to do better or less worse in the bad time than doing much, much better in the good time. That's how it is changed.
Can you elaborate more on this?
Yeah. So what happened, let's say you invested with us and the market is a bull run. By the way, all the money is made because of bull run.
Yeah.
So there's a saying that find some trends right. Now let's say today AI and the AI value chain has a trend.
Tech.
In tech also, if you look, Pradeep, the IT companies are suffering big time.
Yeah.
At the same time, the companies which are in the AI value chain, they are growing.
Yeah.
So let's say you invested in an AI company and you made great money. But eventually what happened, that the inflation is increased, and somehow all the AI companies, or let's say SpaceX for that matter, which is now started coming down, and now the prices will suffer. Like it happened with a lady called Kathy Wood in ARK Investment. So she made fantastic money from from let's say 19 to 21, 22 odd. And when the interest rate goes up, her portfolio just crashed.
Yeah.
Because she bought each and every wonderful company, but at any price. Now, at this moment, what will happen? At this moment, media will write your obituary. You will be finished. So in our business, it is very easy to famous in the year one. But how many of them survive for the 5 year?
Yeah.
So as we cross the 10th year, we become very few chosen ones and because every now and then people come and tell me, why are you not taking leverage?
Yeah.
Oh, in my portfolio, why you will not buy SpaceX? So the whole thing is that it is like people have not seen the 2008.
Yeah.
So any new investor who enter even in the property market, when the properties are just going up, they don't know that they need to have the money for the bad time. Now today, whoever has the cash in this part of the world, he is the king.
Yeah.
And I think you know better than me, because a lot of businesses are suffering. Yeah. And this is what we have learned. So today, we have ample liquidity. And even for this, we have prepared the customer, the investors. So that is what I meant.
Okay. So once I was listening to Rakesh Jhunjhunwala, and I really follow what he said. He said, if I'm making 16 to 18% compounding returns over the period of 10, 20, 30 years, then I'm emperor. So people who are looking at 40%, 50%, they are not long-term investors maybe. And I'm trying to learn also those kind of behaviors from people like Rakesh Jhunjhunwala, Warren Buffett, and yourself. So you rightly said there will be ups, but definitely there will be downs as well. So we have to look for the long-term thing.
So do you remember when you came 2 years to my house, back to my house, and I told you whether you give money to me or not, but you need to make 15% in each and every amount of yours. And I was telling you that don't give everything to me, but at least put into ETFs.
Yeah.
The index fund. So the exact thing I think is what you're telling me right now.
Yeah, exactly.
Yeah.
Yeah, I think that's the learning that you get over the course of period.
Absolutely.
Thank you.
See, you're a businessman, and the reason you come away from the business, because probably to make the same 15 or 20 or 30% like Africa, you might be making a good huge return on capital. but eventually you take high risk.
Yeah.
So the reason to diversify is not to diverse and just park everything at 5-6%. And the difference between a millionaire and billionaire is same. The millionaire makes the money at 15-20% in the business, but he reinvests at 5%. He blindly puts the money into fixed deposit and property. But a billionaire makes at 15-20% and he reinvests at 15-20%.
Yeah.
So very few people know that Jeff Bezos was an early backer in Google.
Really?
And Elon Musk said, the simple fund of making the money in the stock market, or let's say in the business, you make money in a business, and the moment you get the money back from the business, immediately put into another business. Money should keep working, and then we can do a lot of podcasts like this.
Yeah, and I like your saying that your calendar should be free.
Yes.
So I read your the letter that you had sent. I think investors letter that you had sent.
The annual letter.
Yeah, annual letter that you had sent, and I like that one also. That you want, even if you are a fund manager of 100 crore or 100,000 crores or whatever, your calendar should be free. So that is the ideology I want to follow.
Yeah. So Pradeep, what happened if you see English is a funny language, but some of them words are very nicely written. So busy is busy, but when you look at business, it is not called busyness. So business is not busyness. And that's what I think every one of us has to understand. And one simple thing I'll ask you, or I will tell everybody here, Jeff Bezos is running a company called Amazon. But where is Jeff Bezos?
Yeah.
He's no more involved.
Nowhere. Yeah.
Elon Musk started Tesla, and now he started SpaceX. Both are 2 trillion plus company, and Tesla is still running.
Yeah.
It's a great company. So it means what? They evolved, because no company can evolve more than their owners getting involved. Yeah. So we all have to evolve. If I am doing the same thing which I was doing yesterday and I'm not learning anything, even the purpose of the podcast is to learn.
Definitely.
Who will see, what they will learn, we don't know.
Yeah.
I should learn something.
One more question. When the holding becomes 3 to 4 times of a portfolio for a certain stock, how do you distinguish? Should you let the win run go on, or where do you put the brake? What is the dilemma going on during that time? Could you explain?
So Pradeep, there is no dilemma. The clarity is there from start by reading so many books, knowing so many great value investors. And Buffett and Munger said, we are not stock picker, we are business picker. Now, if you notice, because you deal with private banks, whenever the stock recommendation come, I'll tell you this openly, do it, and I tell everybody do it. Just get 10 banks to give you stock recommendation. None of them will give you more than 1 year recommendation. None of them. Why? Because they are brokers. They want you to buy and sell.
Yeah.
Now, do you know any customer of any bank who has become like bank? No. Have you ever noticed why private banks promote leverage? Now, that is what I am now promoting, second order thinking. So the first order thinking is something is available for cheap. But the second order thinking will tell you, oh, that is expiring tomorrow. So should I have the food which is expiring tomorrow or not? If I should have it, what purpose? So once we start thinking second order, third order and fourth order, and I think you know poker better than me, and these pokers also, we should play like casino. Now in casino, people win. I was in Las Vegas, where you have been multiple times, and I went with a learner's mindset. And I found that the dealer was telling me, sir, I have seen so many people coming here and winning. Because I myself won. Thrice I played, 4 times I played and thrice I won. And naturally we'll get happy. And he said then they become so happy and they become so elated and they start betting big. They start drinking and then they lose more than what they brought in. So casino understand this because they are professional. So coming to the business, there is no dilemma because I am reading the business, I'm talking to the CEO. And think about it, everybody made money because we went all in.
Yeah.
In a company we knew well. Like today, you and I went all into Dubai.
Yeah.
And what is going to happen? 1 year of, let's say, stagnation. But after that, the growth is going to rebound.
Definitely.
We are seeing it for the last 30, 40 years. The leadership is so clear. Similarly, coming to the stock, we look at the business. What has changed in business fundamentally in last 15, 20 days? Nothing. In fact, let's say if I talk about gold mining company, which is always people keep pointing to, the gold is now going to be more costly because people who have been moving away from dollar, that will accelerate. So maybe a 3 months or 6 month pause, but if we have a long term horizon of 5 years, from here all the mining business of gold or silver or even copper, because the world is moving towards energy. Energy needs wire. We want to move away from fossil fuel. Why this war stopped? The ultimate reason is the fuel.
Yes.
And if the crude is the main reason, we all want to get away from it in the next conflict. So the dilemma is not there. And we also understand that if you have to make a lot of money, we have to let the position run. If that, I think that day you are telling me that one of the stock has become 6x or 3x in your portfolio.
Yeah. 7x. Yeah.
7x. So if your banker would have cut that position, you would have that 7x position has taken care of other positions in your portfolio. Like in your company, you have hundreds of products, but 5 or 6 make 80% of the business.
Yeah.
You don't cut it. You increase the staff over there. You also think how I can do it better. So I think look at Apple, one iPhone. All the variant of iPhone is iPhone only.
Yeah.
So there are other things secondary. And then they keep on building new products. So you never know when Apple will come with a chip.
Yeah.
And then the chip will become new business like Amazon is trying. So there is no dilemma. It is just that we read the business more. And even if the stock is down and the business is not doing or well, we sell it. So we cut our losses even if the price has gone down because business is not doing good. And even there is some time when the business is not doing well, stock goes up like anything. That is also the time we downside the position. So if we read 10 pages or if we read annual report, this dilemma will not be there.
No, of course. But what I meant is, for example, in a portfolio, how do you manage the weightage of stock?
So when we start, everything is 10%.
Okay.
Now I have said this earlier also. When a company is making, let's say, $100 million revenue, or let's say it is at the P of 5, it is more risky than when this company is running at P of 10, 15. Because earlier it was a small company with, let's say, one mine. Today it's a mid-term company with mines at least in 5 or 6 jurisdictions. So today this company is known to us well. We understand the balance sheets well. We understand the management well. And that is why even having 25% or 20% allocation is like what Buffett had American Express. He bought 23% of American Express when it was going through problem, because when he read the balance sheet, he found there's no problem. Now here in this case, it's all market movement. And still we are 7x on the stock. And we may go down further. That's absolutely right. But are we making same cash flow what we were making 3 years ago? No. We have 4 times the cash flow.
अच्छा, एक और क्वेश्चन आई हैव दैट यू आर engineer as well, computer engineer, according to your studies, and you understand tech well.
Yeah.
So the question is, how do you think AI is helping or not helping in investing journey? Because nowadays I see people, or sometimes myself also, or most of the times my wife, she goes on AI, ChatGPT, what are the stocks that I should get? All kind of questions comes into the head, and we start putting, and then we take the decision accordingly, not with big money. She has her own IBKR account and she keeps playing with small here and there. But do you think AI is helpful, not helpful in investing term,
So I think you meant generative AI.
generative AI?
So AI is very helpful. The challenge here is today that our eye is not evolved. So the eye people think is intelligent because A is artificial.
Yeah.
But eye, which is not an intelligence, it is basically manifestation. It is intuition. Now, today you would have heard that they keep promoting a prompt engineer.
Yeah.
Like what question you all ask, accordingly you will get.
Yeah.
So there is an old story that Mrikand and Markande, if you've heard, the boy was granted only 12 years. So the father said, no, don't worry. I know how to take it to next level. So he called a lot of people, saints at home. And one of the Saint Naradji also came and he always asked his child to go and take the blessings. And one of the blessing was Ayushman Bhava. And that blessing happened, that 12-year gone.
Yeah.
So that prompt is what he knew as a guru, what my child should ask. So even AI came, but if I do not know what to prompt, I'll give you a very simple example. So let's say I give you a transcript, a voice recording of this, like this podcast. Yeah. And now I want to read out the summary of the audio file. You go to ChatGPT and you give that file and tell it to make the summary, it will say, I cannot do it.
Yeah.
But if you go to Codex, which is ChatGPT's code platform, and if you give it to Codex, it will do it.
Yeah.
Now, I understand ChatGPT and I can ask query to it. It's a very basic level of AI. So first of all, answer to your question, AI is must. Men with AI will remove the men without AI from the business. Now, why should we use it? Because we men are lazy. So for all these small tasks, we should have agents who will not get tired, who will not ask for a salary hike, and they will run absolutely on time. They will be disciplined. So AI should be learned by everybody. And if I would have not understood myself, I think I would have been out from the industry by now. So before we do the stock research, I will recommend everyone to first understand who they are. Because one thing AI does not have is soul. Yeah. And because of that, we should not forget that we only created the AI. So it is very important to understand who I am. What kind of evolution I need to have first. And that is called self-knowledge. So once you have the self-knowledge, then AI should be used.
Okay, the question was, should we accept whatever the stock recommendations being given the AI?
No, so AI is going to. So if you have heard a small thing happened, there was a legal firm which used the AI to draft the legality.
Yeah,
and even I face the same situation. So we still need people, and that firm got fined because there was something wrongly mentioned. And today, even today, the AI is not perfect. So the podcast, very small thing, less time to tell you, but Modi ji gave a speech and he said that if you tell the AI to draw a man with a left hand holding a pen, it keeps drawing a man with a right hand and holding the pen.
Yeah.
So the way AI model is trained, if that is faulty, like how Google map has led some people in India to fall from the bridge. And I think a few days ago, even the map was not working here. So similarly, if we do not understand what AI is producing, what eventually happens, Pradeep, is we will fall at the highest level. And there is no coming back. So AI should be used judiciously. We need to thoroughly review what content has come. And AI should not be used blindly.
So Bhuvan, you know my temperament better now, and we have been working together for over a couple of years now. So my question is, what have helped you understand about me, about my way of investing, and how can I improve myself to become a long-term investor? Can you please help?
So, Pradeep, I think very few people have the audacity to introspect and ask these kind of questions publicly. I am not an authority to do so, but I will tell you something about our business. Our business is a very difficult business because when people come to us and they invest their money, we don't guarantee anything, but we guarantee a loss, as you know. And anybody who told me, let's start tomorrow, that tomorrow doesn't come. So there is nothing wrong with your behavior as long as it is concerned with understanding a person whom to deal with. Because time is the key, where you will get to know that person in various meeting you are observing. We all are observing each other. Yeah. There is no judgment. Judgment should be left outside. Yeah. And after your observation also, I could be bad guy. Now that is your limited observation. So we should be prepared for that. And that's why probably we do not go all in with one person or one company. So the time you have taken is great, but with the investment checklist probably you can shorten that length. And that is how you can enhance your journey of wealth creation. So let's say you want to buy a house. Can you take 2 years to decide? Probably not, because that is opportunity cost. So assume I was one of the good partner for you and you took 2 years. So that 2 years would have an opportunity loss. Because if you start liking me or saying that I'm learning from you, it means you should have started earlier. We all keep waiting for a mentor or guru because we're not sure. So I think the most important thing is the checklist. And once you have that checklist, you will find people better than me to come to your life. And that is how the behavior will improve. That is how the life will improve. That is how the journey will improve. So I think have a checklist for everything.
So even in choosing the partners or choosing who will handle my money, I should have a checklist.
Obviously.
And I'll ask you to help me out that also.
That's amazing. I'll give it to you.
No, but my way of working or the style of working, as you know, I don't go big with somebody whom I don't know, and I kind of back my observations. I observe a lot, and it takes time. So with you also, if you remember, I met you several times. I came to your home, even during the satsang, even when your dad used to do the katha and all. Obviously, apart from listening to the katha and spirituality, I was more observing you, how you are as a person, how's your living style and all. I'm sorry, but that's how I do.
See, I tell you,
when I was convinced that this person I can trust to give my money, because it's hard-earned money for anybody, and this person will, if not make money, or even if it loses money, but it will not be bad intent. There will be no frauds. That I was absolutely sure. Then only I started coming to you.
I think you made my life easy, because all the other person you're working with me, I think I should do a partnership with them, because you've already done that due diligence. So nothing wrong in it. I will tell you something. You're not alone. People keep observing all the time, because I don't ask for a small money anyways.
Yeah.
However, let's say you have $200 million and now you need to invest. Example we're taking. So let's say you should not do more than 5-10 investments. Yeah. Now, if you have to go fast and you have to still not go wrong, for that you need a mechanism in place. Yeah. Because the companies which have become best in the world, like Amazon, they not only give you the best product, they also give you it fast. Yeah. So doing things fast at the same time giving them the best is the key of life. So I will recommend a checklist. You already have a mental checklist. Yeah. But if you can make that checklist on the paper, it will be easier for you. You can make a process, then probably you'll get many Bhuvan Gupta in your life. And that's how your behavior, your money and everything will multiply.
If you had to write an owner's manual, what would be the 3 principles which are non-negotiable?
So Pradeep, I think most of the businesses are running as a, I think, say experimental. So have you ever assembled an IKEA furniture without reading the owner's manual?
Not really.
That's exactly how various businesses are running right now. So we have a proper checklist, and the owner's manual will always have the quality, growth, and the fair valuation. And that is how we're going to run the investment philosophy.
If tomorrow I doubled my investment with you, what will you be doing differently? What kind of different assets allocation will you be doing, or you will be simply trusting on what you have been doing and doubling down on that?
Okay. So, Pradeep, thank you for the question. Let's say if I eat one roti or one bread, and if I eat two bread, do you think if I have one bread, I should eat faster and gulp it down? And if I eat two breads, I should be more careful? I don't know, when you will give me, let's say you have given me X amount, and if you're giving me 2X amount, your net worth might be lesser now or more. But from the perspective of handling each and every investor, I look upon them as a shareholder. Now, somebody who gave us $100 or who has given us $1,000, from the perspective of growth, they both have the similar expectation. In fact, the $100 person has more expectation
Definitely.
because he has less to lose. He can't lose that money. And that is why this model which we have made is perfect for anybody who can handle volatility, who understand that theoretically money may be zero, but practically it can never happen. As a businessman, you also understand. So even if you, let's say, give 2 million, 5 million, 10 million, or 20 million, yes, the big money in the capitalism attract lesser fees. But apart from that, things will absolutely be same, because if we have to keep the calendar free, life should not have, we should not have various models. Like iPhone 17 has 4 or 5 options, so you choose what you like. Similarly, I learned from Buffett. You see, Buffett has only one investment vehicle. You buy in the Buffett company, and then you will be getting the share of proportion. So I won't be doing something different. Obviously, probably we might want to meet you more to make sure that you are served properly. But that we will do with anybody else also. So in my opinion, this method has been devised so that I can get time to think. It is like, let's say I give you 10 different strategies. You will feel safe. But at the same time, how will I read those companies? How will I able to do justification? They're saying that stock and children should be as less as possible, which you can manage. So I believe if I buy 4 companies for you, you will be at less risk, because I will be able to give more time to them. Like we all have made money from 1 or 2 companies.
Yeah.
So more or less things will be in the similar direction.
Bhuvan, one interesting question came just in my head. What do you think? What is the difference between a millionaire and a billionaire?
I think, Pradeep bhai, the difference between a millionaire and billionaire is a very simple thing. Billionaire is open to share. Millionaire is not. And that is why majority of billionaires have multiple stakeholders in the business. And that's the truth. That is the key difference. If I were to ask this question to you, that how a billionaire is different from a millionaire, what would have been your answer?
Well, I think for a millionaire, his asset is the inventory. The inventory that he has, that is his asset. And for a billionaire, his people, his team members are his assets.
Oh, wow. What a nice thought.
That's what I think the difference is. If money is doubled or tripled or whatever, you should not do injustice or injustice with others who have less money or who have put less in their portfolio. So the strategy should be same for all the clients. So thank you very much. It was wonderful talking to you.
See, you're going to be a shareholder anyways. And as a majority shareholder, do you like us together to do something wrong with the minority shareholder?
No, of course not. Yes.
So that's why it is like that. Thank you so much for inviting me. Pleasure talking to you. It's all pleasure. It's all mine.
Thank you. I'm really happy to see you.